afternoon, everyone. Doug Burson here. Just wanted to give you guys an update on what all's going on in the tax world and in our office. So stay with me. We'll get to some of what just occurred in the new legislation. But first, I just wanted to go over a little bit of the status of what's going on as far as time frames, etc. So one, I just got to say thank you for you guys' patience. This has been an incredibly tough tax season already. They took 3 weeks away from us from the very beginning and then told us we got to get it all done with 3 weeks less, and they've made it a whole lot harder this year. So once again, I just want to say thank you for your patience. We're running around 2 to 3 week turnaround right now. So I just want you to know that's where it's at. We're getting to them as fast as we can, but with this, with the EIP and all the other things that are going on, there is a lot more time it takes to get each return done. So it is taking us longer. The entire industry is about 30% behind. So it's not just us. Everyone is struggling. The IRS is 30% behind in processing. All the major organizations, AICPA, National Association of Tax Professionals, everybody's asking them to push the deadline because with what they've done, it's just not possible for us to get them all done. So I want to reiterate that we're doing it the fastest we can, but we got to make sure they're right. And then they changed the rules on us. So we're going to get into that here in a minute too. So I wanted to go over that, let you know we're about 3 week turnaround time, doing the best we can. I do expect that we're going to get a extension on the tax season, but there's no way to know that. They do want to push that out to the 15th of June or July, depending on the source. No way to know for sure. But I would like to talk about that for a second because a lot of people are scared of extensions, and there's no reason to be. You can file an extension that gives us all the way till September for a S Corp or partnership, and all the way till October for individuals. And to be honest, for a lot of you, we really probably want to wait now because so much has changed. So don't be scared of extensions. There's no reason to be. A lot of people use them. There's a lot of good reasons to use them. And this year, there's going to be a lot more extensions than there ever has been before by far. Not just within our office, but in the entire industry, because there's just no way to do all this. Plus, they've changed the rules. Like I said, we'll get to that. There's some other things. A lot of you have worked from home this year. And if your job was in Kansas City, and you now work from home and you're not in Kansas City, and I brought this up a few weeks ago on some videos, you may be eligible for a refund on your Kansas City withholding. So if that's you, and we haven't already dealt with that, we're probably going to need to know that before you do your tax return this year. If you've already filed your return, then let us know and we can look at maybe doing an amended to get the Kansas City withheld back. That's going to be a big thing for a lot of you. So I wanted to make sure that if you haven't thought about that, you've thought about it. Another one is the stimulus. What if you didn't get the full stimulus? And that's really one of the things that's slowing us down on the tax returns this year, is we got to try to verify that, and we have to actually do some extra stuff to take care of it. But let's say you did not get the full stimulus last year. We can claim that on the tax return. So I know there's been some concern. We've covered this before, but I just want to reiterate, we can get it on the tax return, but we're talking about the first two, not the one that just came out. That's a whole different deal. Just the first two. Do I think tax season will be extended? I think I already covered that. I hope so. At the beginning of the season, I said absolutely not. They better not do that. Right now, with the way everything is shaping up, I hope so. All right, so let's get into a little bit now about what's going on in this new tax bill. There's some very interesting stuff. And one of the big ones right up front is going to be unemployment. The unemployment one is a big deal, and I know we're going to have a lot of questions on it, so I want to cover it right up front. So what is it? If you made less than $150,000, and it is a cliff, if you hit $150,000 and $1, you don't qualify. But if you made less than $150,000 household, the entire income for the whole household, husband and wife, or single, head of household, They haven't said any different. Married, filing, joint, single, or head of household. It's $150,000. So if you made less than that and you collected unemployment, the first $10,200 for you and your spouse are not taxable. How are we going to deal with that? And that's really the big question. One, if we've already filed your tax return, you need to let us know. We're going to do a data mine on our end too, just to check for it. But let us know. We're going to have to amend your return to get the refund. That's how this is going to work. So if it's already been filed, you're not out of luck. It's just we're going to have to do an amended tax return. Probably not going to be able to do those till after April 15th so we can get all the original returns filed. But we'll do an amended return and you will still get that. So don't worry, you're not going to be left out. You will be okay. But what about those of you who haven't filed yet and have unemployment? We don't know when we can file that tax return, okay? And so I want you to know that right up front. There's some things that have to happen. One, the bill had to pass. That's now done. Then it has to go to the Treasury and they have to interpret the bill. And it's not as simple as you may think because the income from that unemployment affects a lot of other calculations. So they have to interpret it and they have to figure out what all is meant and what all it's going to impact. And then they have to make it so that the forms will work under this new information. Then they have to get together with the tax software vendors and get it approved through each vendor so that we can do it. So long story short, yes, it's not taxable. However, we don't know when we're going to be able to file your return. There's going to be a delay. I could be wrong, but I expect this is going to take several weeks before it's all approved so that we can get that done. So if you got unemployment, we're going to have to sit on your return until they get the forms approved. Otherwise, you're going to pay tax that you shouldn't have. So that takes care of that, I believe. Another thing that's on the same line, what about those of you who have the Affordable Care Act and you had to pay a portion of that back through the premium tax credit? As of yesterday now, that is not required to be paid back. So just like unemployment, we're going to have to amend your return to get that back. And so we're going to have to look at it. If you only paid them $100, it's not going to be worth you paying me to do an amended return. But if you paid them enough, it's going to make sense. And so we're going to have to look at that and redo a lot of returns potentially based on that. What if we haven't filed yours? It's going to be the same thing as unemployment. We don't know when the forms are going to be approved. And so we're going to have to sit tight and wait. And once it happens, then we can go forward. So I have a feeling a lot of these returns are not going to be able to be processed until April. Once again, another reason why I think them extending the deadline is going to happen, but if not, it's not a big deal. We file an extension, we push it out there. I'd rather do an extension than file the return wrong. It's going to make your life a whole lot easier and a lot better. So that's how that's going to work out, and I wanted you guys to understand that that is a big change. Individual recovery rebate credit. Everybody wants to know about that. That's been covered very widely, so I don't think I need to cover that a lot. It's $1,400 per person, husband, wife, and dependents. So even the dependents get the $1,400. So this is going to be a big chunk. When is it going to go out? I think it's going to be like what happened in December. They passed the bill. They've got things in place. It's going to happen pretty rapidly. It's going to be based on the last return that was filed. Does that mean if I file your return today, it's going to be based on that one? I don't know. I don't know what their deadline is going to be, where they're going to be able to pull the database from. So we're just going to have to see how that works out. But if your income was above the threshold for that in 2020 and it wasn't in 2019, it's going to be the same kind of thing. We're going to want to sit tight on that return. Wait till the stimulus is paid before we file. And then this year, guys, try to keep track of how much you got, because there's going to be a lot of reconciliation work we're going to have to do on the tax return next year. And if you keep track of it now, it's going to be easier for us to do the tax return next year in an efficient manner. So that's a big deal. I don't want to talk on that one a lot because that's being covered everywhere. but it is true, and it will start coming out really soon. And once more details come out, I'll probably put something else out because there may be a way for us to update information. The best way is through your tax return. But at this point, I think they've got what they got, and trying to rush something through is probably not going to help you anyway. But I really don't know. So that's that. There are phase outs on the credit. So if you made over 150,000 for a joint, it's going to be phased out, and it ends at 160. If you remember last year, it was 150 and ended at 200,000. They did some negotiation, and so it went from 150. If you make over 160, you're out of luck on that one. And if you're single, 75 with a phase out of 80,000. So they did shrink those quite a bit. It was 75 to 100 last year for this new credit. They have lowered the thresholds, and so there are some people who got some last year who won't this year, and that is why. I want you guys to understand that that's what's going on. And I'm not going to cover everything, but I'm going to try to go through the stuff that I think is important right now for the tax season. Okay, child tax credit. I want you guys to understand that is for 2021, not 2020. So it's not going to affect this year's tax return. And there's some things out there that still have to be resolved. The bill is written in such a way that the IRS could actually say, you know what, we don't have the ability, we're not going to do it. I don't think that's going to happen, but it could. So I don't want to spend a lot of time on that because that's probably not going to start till around July, and we'll cover that more when there's more available. I think there will probably be a way for people to update bank information, update addresses, all that kind of stuff, but that's probably not going to be till post-tax season. So don't get too worried about that. Just know that it is, it's $3,600, I believe. Yeah, $3,600 for kids 6 and under, and $3,000 for kids under 18. And what they're saying is they're going to do a 50% credit for those for the last probably 6 months of the year is what it's looking like. So for instance, if you had I believe it works out to roughly $250 per kid per month, unless you have the 3,600. If they're under 6, I believe it's $300 a month. But it's for 50%, and then we're going to have to reconcile that on the tax return. So I want you guys to understand we're going to have to keep track of all this, and we're going to have to do all of this on the tax return next year. So you're going to have to keep track of how much you've got so that your return doesn't have issues when we file next year. Here you go. There's the example. So assume you're entitled to $6,000 of child tax credit. So that's 2 kids at the $3,000 limit. So that's kids that are between 7 and 18. You get $3,000, and what they're going to do is take half of that and give it to you on a monthly basis at $250 a month per kid. And if it was a $3,600, that's where the $300 a month comes in. So that's what they're talking about doing, and we'll find out more details. Like I said, I'll cover that more when it gets closer. There's a lot of ambiguity in how that's written as far as how they can apply it. So we'll just sit tight on that. Some changes to earned income credit. That's mostly going to be effective towards next year, so I won't worry about that too much. Dependent care. Child dependent care, that one has changed. Once again, this is all 2021 stuff, not 2020, and that's why I'm not going to spend a lot of time, and if I've said some things in this video that aren't quite right, give me a break. It just passed yesterday, and most of it doesn't apply till next year anyway. But those of you who get the daycare credit, you realize that it's only the first 3,000 that applies for the credit. And what they're doing is they are bumping that up a lot. Like I said, we'll cover a lot more of this later, but they're taking it to 8,000 for one kid versus 3,000. or 16,000 versus 6,000 if you have more than one kid. So greatly increasing the amount of the child dependent care credit. So we'll probably cover that in another video, get into the nuts and bolts of it. Once again, next year. Doesn't affect this year, it's next year. So, and by next year I mean 2021's tax season, not 2020. So that's that. I think that's most of the stuff I wanted to cover that's going to affect us. The main thing is they're changing stuff. Tax season is slower this year. We're further behind. We're doing our best, and I just want to thank you guys for your patience. But this is nuts. All right, I'll be honest, it's nuts, and we're doing the best we can. And as always, we're going to do our best to keep you informed and up to date and as knowledgeable as anybody out there. And I just want to appreciate you guys. You're great clients, and share this with anybody you think it'll help. And we'll go from there. As I learn more stuff and there's details that maybe you need to know, of course I'll send that out. So thanks again and have a wonderful weekend.